Hi, this is Mike Feiner. This is the July 2024 Final Wealth Report. And what a month it's been. Starting about a month ago, we had a debate between President Biden and former President Trump. Fast forward 3 weeks, we had a failed assassination attempt against former President Trump. And just yesterday, as I was driving home, we find out that President Biden is leaving the election. So it's thrown everything into turmoil. I've gotten a lot of questions as to how the election cycle and all this turmoil affects our financial future, our stock market. And some background with that is that historically, we are in the fourth year of the presidential cycle, meaning that the president was elected 4 years ago. So this fourth year tends actually to be a very good year for our stock market in general. There are some caveats to that, and we'll talk about that. So the fourth year of a presidential cycle tends to show some strength at the beginning of the year, show some volatility in the middle of the year, and then after a president is elected, regardless of who it is, it tends to go up. Now, let's take a look at the overall situation that we were presented in 2024. At the beginning of 2024, the biggest issue seemed to be inflation. Everyone was concerned that inflation was going to finally rear its ugly head and it was going to destroy the jobs market. In fact, most macroeconomic theory indicates that in order for inflation to be tamed, one has to increase the unemployment rate. People have to lose jobs. Because the idea is that if too many people are working and the economy is too strong, then that is what causes inflation. We probably can argue at this point that the Phillips curve, which is the theory behind this idea of a correlation between or inverse correlation between inflation and unemployment, has been proven wrong in this instant. Part of it may be transitory inflation due to the pandemic. Part of it may just be due to really a new economy, a new productivity with artificial intelligence, new productivity with software, new productivity with healthcare, etc. So we have a situation where we have a recession that never actually occurred. And we have modest unemployment, actually almost all-time lows, and we have inflation that is coming down. With a macroeconomic backdrop of this, it would tend to favor the incumbent. There's a greater than 90% correlation between a strong economy and re-election of the incumbent party, which would favor the Democrats. On the other hand, high inflation tends to kill a president. Look back to the 1980s. We can look back to the Great Depression and many other times where we have high inflation, which destroys the buying power of people and increases grocery costs. It increases rent. It makes things very unaffordable for people. That tends to cause a change in the party, and it tends to have people want to change who is running the country. So we have two competing forces right now. We have a strong economy, lower inflation, low unemployment, but we have inflation in all the wrong places: groceries, rent, housing, etc. Even gas prices and oil prices are increasing. So what do we make of all that? How do we synthesize it? Well, we still think inflation is probably more important to a voter than is the macroeconomy. So I would tend to think that that is going to impact the Democratic Party more than the Republican Party at this point. Turmoil on the election tends to just create more volatility in the stock market. The one thing that's different in this election is that we've had both of these presidents serve before, obviously both Trump and Biden, and now Vice President Harris potentially, who is the presumptive nominee. And we know that their economic policies are not going to be completely unfavorable to a strong, growing economy. In addition, I think the backdrop is the United States has a competitive advantage in this economy for the first time in many decades. Our software, our hardware, our medical technology, our system and capitalistic system is far outpacing our competitors. 10 years ago, we were dealing with China as a competitor. I don't think that that is a major factor at this point. Obviously, Russia, some emerging economies are not factors at this point. Europe is in turmoil and is just not producing the creativity and the types of products that we need for the next generation, which includes, as we mentioned, large-scale technology, software, biotech, all of the inventions and the digitization that we need artificial intelligence for the next generation. With that, we think that the second half of 2024 will be fairly robust, and that will probably be weighted toward the fourth quarter. Earnings in the second quarter have been coming out reasonably strongly, which favors the most important thing in the stock market, which is company earnings. Company earnings have been good. Good company earnings tend to help the stock market. They tend to help jobs. They tend to help everything. A few other things to think about. September 15th is around the corner, unfortunately. Summer is halfway through, maybe a little bit more. And to just think that it's time for a little bit of tax planning, third quarter estimated payments for individuals, for entities, as well as start thinking about how to fund your retirement plans, how to think about certain year-end planning, purchasing equipment to get some of that bonus depreciation if you're a business. So our conclusion is the economy is fairly robust. We expect the economy to continue as is. We think that there is more productivity due to software improvements and artificial intelligence and digitization in the economy than can be measured. And as a result, we should have some strength, at least for the next 6 months through year end, which should help lead the stock market and the jobs numbers and corporate profits to a good place. As always, if you have any questions, please feel free to call me at 978-740-1011. Call my cell phone, 617-285-6259. Please look at our website, www.finder.com. We have some new videos and some robust resources to include some checklists if you're planning to move to Florida or to Arizona, and some things that you have to do to change residency and some guidance there. Please visit us also at any of our other offices, whether it's Vermont, Naples, Florida, Scottsdale, Arizona. We look forward to that. And reach out at any time that you have any questions. Thanks so much, and we plan to do a more thorough and longer video soon to discuss our expectations in the third and fourth quarters. As always, thank you so much. I'm Mike Feiner, and thank you for joining us at the July 2024 Final Wealth Report.